Hello, trading has closed on December 24th, 2024. As always, we'll start with our disclaimer, go over our calls, make our predictions. It's my trading plan for Thursday, which is December 26th. Please remember my calls can be wrong. Trade at your own risk. Happy holidays to everyone. I want to stress I have personal business tomorrow. I might not make any trades because I'm going to make a call that really fights the odds, but I'm going to make it anyway, and I'm pointing out I might not be risking my own money. If I'm right, I'll have plenty of time to jump on the train. Look for the pattern today with the early low, and that certainly is this. And Thursday's pattern should also be the pattern with the early low. Let's go over what happened during the day. MEJT gave an ultimate sell signal. It gives us a target that ultimately we'll see 6001.22. And almost always we're going to get significantly lower than this. Now there's no time limit on it, but normally you don't have to wait very long. So how likely is it that in a strong rally like this, that's nearly erased this complete drop, how likely is it we're going to see that number? Well, this is the track record of the system. We get about 150 ultimate targets a year. System was developed in 2002, so over 22 years, 150 targets a year, well over 3,000 ultimate targets. The last one, which didn't print, was in 2020. Before that, you have to go back to 2016, and before that, you have to go back to 2013. So over 11 years, I have 2 of them which haven't printed. In fact, in the last 8 years, only 1 of them hasn't printed. And I have only 7 which haven't printed in 22.5 years. So the odds are pretty overwhelming that ultimately we'll see this number. Now, it doesn't have to print soon, but almost always you don't have to wait long. Well, here are some Gann fan lines from the summer high in 2023. If you look, you'll see how they're pretty good at calling that low, calling that low, calling that high, pretty close on that high. And now we run right into the line. It's one of the places where we could run into trouble. Don't have to, I mean, he didn't work here. But it certainly is something to get your antenna up, because you connect that high to these highs to that high, you got a pretty good trend line. And the rule is you gap over the line or the line wins. We don't gap up on Thursday and they break through that line, probably isn't going to work. Well, we're trying to count from this high here. We call the high with the ending diagonal triangle. We have an ABC down. We're trying to find B. Now, if this is A of B, and that's B, I don't have any good fib relationship, so by that standard, you don't have to be over. But if this is B, this is 23.6% of this. If this is where B ends, then C is exactly equal to 61.8% of A. So if that's C, it ends right on target. And if you draw a Fibonacci grid from this low to this high, that's at 61.8%. And if you move over here, you have come back to all these prior lows without overtaking a subsequent prior high. So prior lows are resistance. You rally to resistance in a straight line. Normally you want to break through resistance when you hit it. You rally to it in a straight line. That's pretty tough to do. Also, this is impulsive. This is overlapping, corrective, and takes longer. This should be the standard wave. It's also the first move after the FOMC announcement price. It should tell you the next move of consequence, and this is, I'm interpreting as an overlapping corrective wave. Now, of course, if we open up here, something else is going on, but frankly, based on all this stuff, we should really stop right here, or else I think something else is going on. This should really be about as far as we go, and if we go a lot higher, I'm going to have to get my eraser out. Well, Thursday's pattern has the early low regardless of where we open. Typically, it's a rally day with a final hour high. If it's weak and still, we should see more weakness in days to come. In just a few days, we rallied over 200 handles from the post-FOMC collapse. Nonetheless, that collapse was impulsive. The recovery is overlapping, has taken longer, and it's corrective. There's a lower MEJT ultimate target. Ultimately, it should print. Normally, you don't have to wait too long. We rally to an area of strong resistance in a straight line. Either we gap over the line or the line wins, meaning if you break through it, it won't stay. Breadth has just not improved on this rally, and at some point that has to be rectified. It should make it unsustainable. Despite this being one of the most bullish times of the year, we're in an excellent place for the market to drop right from the open and begin a sharp drop. And in capital letters, if that doesn't happen, and especially if we maintain a strong gap up, then something else is going on. Calling for a sharp drop starting at this time of year goes against the odds, but the indicators I follow support the call. I recommend seeing if we get an early drop before risking money. I mean, if we're not dropping right from the open, I just wouldn't risk money on this. I just don't like calling for short sales this time of year, but all the indicators are there. I mean, if we start dropping, we're going to have a pretty big drop, and if you don't catch the exact top, I think you'll still make money off of it. But if you get in too soon and we keep going up, I'm going to get a lot of angry letters. So just be aware we came through resistance in a straight line. If the analysis is right, you really should drop pretty much right from the open. We keep going up here. We don't collapse here. I don't think you have to risk money because no one's perfect, and I'm certainly not perfect. This is just a perfect place for us to top out, calendar or not, and if we don't risk money. But if we do, there should be a substantial drop from here. So we'll have to see what happens on Thursday. I wouldn't jump the gun on this one. It's the pattern with the early low. Be prepared to go short. But if it doesn't trigger, keep your powder dry. That's my advice. And that's today's call.